My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. We're always going out of our way to try to make Mad Money the most interactive show on television. So last Wednesday, when Mark in California called in about Student Transportation, Inc., STB, and I said I'd do more homework and get back to him, I meant it. And tonight we're going to do you one better. Student Transportation is a tiny $6 and change speculative stock, $500 million market cap from Canada. Company is the third largest provider of school bus transportation services in this country, with 9,500 vehicles operating out of more than 130 terminals. STB takes 1 million children to and from school every day. Now, STB sports a monster 8.5% yield, and it's unique among school bus operators in that over 1,000 of its buses return on alternative fuels, including various forms of natural gas. So this is an interesting story. That's why we want to tonight check in with Dennis Gallagher. He's the chairman and CEO of Student Transportation, in order to hear more about his company and where it is headed. Mr. Gallagher, welcome to Mad Money.
Thanks, Jim.
Hey, Dennis, thank you for coming in. Really appreciate it. All right, you're a novel company. We've not had a school bus company, and I know that you're also located in Canada, so we got to say up front that there are different tax considerations for Canadian companies than American, because that yield is a qualified yield, right? So if you're American, you should check with your accountant before you buy it. Is that the best way to put it?
Well, it's a qualified dividend by the IRS in the U.S. because the dividends are paid out of cash flows.
Okay. Just want to be sure, because I don't want people to say, well, wait a second, this is not. Canadian companies have different implications from American companies when you
Absolutely,
do buy.
yeah.
Okay.
We're a Canadian corporation. We're actually based here in New Jersey.
Right. Okay, excellent. Now, you've got a novel business strategy. People don't realize that mom and pops run a lot of student bus companies, and you're just buying them up around the country, right?
Well, this is school busing is a $24 billion industry in North America, and in the U.S. in particular. The thing with us is 66% of the $24 billion is owned and operated by municipalities and governments.
Okay.
So it's a big privatization play. Now, what we've done is we actually went public in 2004 on the TSX as a U.S. company, right, going public on the TSX in the income trust-like structure up there, right, which you know is a high-yield dividend kind of market for us. And the Canadians love it. And by the way, they yawn at an 8.5% yield. So I've been up there for 7 years and thought maybe the U.S. market would actually like the opportunity to have a yield. Now, the problem is the U.S. guys don't believe it. But this is, what the Canadians have allowed us to do, and we're 65% today Canadian-owned, 20% U.S.-owned, and 15% French. But literally, this has enabled us to build a national footprint. So we've now built the house, and now it's time for us to really ratchet this thing up with non-asset growth, and that's what we're spending a lot of time on.
Okay, you said they don't believe it. Is that because the dividend is not covered by GAAP earnings?
No, well, we don't pay dividends out of net income, right? We pay dividends out of cash flows. So, okay, yeah, we've got $65 million of EBITDA. We've got $45 million of free cash flow, and we pay about $36 million out in dividends.
Okay, now, if you look at here's what I'm concerned about. When you read the research, they say, well, look, eventually you have to buy new school buses. The school bus is going to cost a lot of money to be able to buy, and obviously, you've got short-term loans. If the interest rates go up, will you be able to continue to do as well?
Yeah, one of the things that we've got is we've got a tremendous bank group, number one. We've got low-cost leasing right now. We've never seen leasing costs like this. We're borrowing money at 1.9 to 2.3% fixed for 7 years if we want it. So we've got tremendous access to capital other than our own. The thing that we're doing, though, right now is we're going in with municipal bond financing. Remember that kind of deals? So the banks are borrowing from the government at 0. They're lending it back out to our customers at 2%, fixed for 10 years. So we're doing this managed business, we call it, where our customers still want to own the assets. So that's the model that we're trying to move over to now. So we're going to grow this business without us going back to the market and literally using the municipal tax financing, and that's going to be a huge difference for us.
At the same time, you're saving costs by using alternative fuels that are uniquely American. How's that going?
Well, this is a tremendous deal. Cerberus Corporation, as you know, Cerberus, they own Bluebird, and I heard you on the other day say I rode a Bluebird bus.
You bet.
Well, Bluebird's now owned by Cerberus, but we're also working with Navistar, we're working with Freightliner, we're working with Collins, and we've developed with them and Roush Fuel Technology, Jack Roush, the NASCAR guy, he's partnered with Bluebird, and they've created this LPG engine that is unbelievable. So we've taken now 1,000 buses, putting them on the road this year, the largest contract in Omaha, in the Oracle's new town there. We just did a deal. But we're taking $3.65 gallon diesel down to $1.60 and locking in for 3 years. And by the way, that's without a 50-cent discount from the government, who gives us an alternate fuels tax. I don't count on that 50 cents coming back, but if it does, I'm now paying $1.10.
So the payoff, even though we hear many trucking companies, bus companies saying, listen, it's a multi-year payoff to switch, you're saying it's not a multi-year.
Oh my God, it's not only long-term, it's immediate. It's going to be huge savings for us. That's going to drive our payout ratio down from 83, 85% down into the 70% range for this coming fiscal year, which just started in 2014.
Well, I sure wish more people would listen to you, because I'm tired of hearing that the payback is too long and too big, and therefore it's not worth doing.
No, you had to get here's what we had to do. We had to convince Navistar, Freightliner, and Cerberus to lower the cost of the capital of this engine.
There you go.
Get those R&D costs out of the way. Don't make me pay for those. And by the way, this is, there's 500,000 school vehicles on the road every day, okay? As I said, the government owns 66% of these things.
So there's many more going to be privatized.
The fleets are getting older and older. To a 12-year life, they got to replace 42,000 a year. They're replacing 27 to 30, which means that they're getting older. I put my 2% financing down and my LPG. I'm lowering maintenance costs, I'm lowering fuel costs, and I'm giving them the lower cost of capital. This thing's got to work.
All right, so everyone listen, this is Dennis Gallagher, Chairman, CEO of Student Transportation. Remember, you have to check into the yield. Check with your accountant if you want to, because this is a different kind of tax structure than you may be used to. But you hear what they're doing with the LPG, and there's a lot of growth opportunity ahead. Stay with Cramer.